Well, let's take a look at your market news now. Asian shares and U.S. stock futures rose thanks to a weekend deal by U.S. President Joe Biden and House Speaker Kevin McCarthy to suspend the government's debt ceiling, ending a protracted stalemate and providing some relief for investors. U.S. shares rallied at the end of last week on hopes of a debt ceiling deal and on optimism about artificial intelligence. In the week ahead, more U.S. economic data will be on tap, such as job openings and non-farm payrolls that could influence the Fed's thinking for the June decision. For more analysis, we are joined by Gary Booysen, who's a portfolio manager at Randswiss. Gary, thank you so much for your time. Let's touch in on market sentiment right now, because you've got U.S. markets that are closed for the holidays, as well as some optimism around this deal.
No, definitely optimism flowing into the local markets. I think it's important to understand that the UK market is closed today. So we've got some volume coming out of general trade, but it's only the financial index that's on the back foot. So that down 0.2%, while we have the resource index obviously benefiting from the weaker currency. I think anyone who's selling products in dollars, South African companies at least selling products in dollars are pretty happy. So that's up 0.75%. Overall top 40 up about 0.25%. The industrials up just over a tenth. So South African rand still unfortunately very, very weak. So that's sitting at 19.65 to the US dollar at the moment. And that just after obviously the disappointment around the rate hike on last Thursday, and I suppose the ongoing load shedding and the host of other problems that we have domestically. So it's a quiet day, but positivity certainly feeding in from the the potential deal around raising the US debt ceiling.
I did mention in my intro that stocks were fueled by the idea of artificial intelligence. Tell us a little bit more about it, and perhaps is this now the time to get in?
Well, it's a good question. So, artificial intelligence, I think it's an incredibly exciting sector, and it's one of the reasons that you're seeing the overall index in the US lift. Most of it is coming from the heavyweights, so the likes of something like Nvidia, which jumped 25% last week on an improved outlook for the artificial intelligence sector. That is looking quite pricey at these levels, but while there's plenty of other stocks that you can express a view on AI through. So we're seeing a big recovery in Adobe shares. Adobe finishing up on Friday, almost 6%. That really on the idea of they released basically a generative AI plugin where you can do all sorts of wonderful things with a Photoshop package. You can kind of just describe the image that you need, and the AI will draw it for you. So the market's getting quite excited about that. But I think the real excitement for us, certainly, and I mean, we are fairly excited. I think this is a very different thesis from, the kind of more hypey stock themes that we've seen in the past, things like marijuana or, to an extent, crypto. Is that these are real applicable tools. These are things that already I can see, people using in their daily lives to dramatically increase their productivity. Now, one of the ways to express a view on that is probably through the companies that hold these large data sets. So something like Facebook, for example, even the banking sector to an extent, with all that transactional history and, what the AI modules, the LLMs as they call them, will be able to do, in sifting through vast amount of data very, very quickly to come up with answers. So definitely a very, very exciting sector, one that we are definitely investing in. Is it too late? I don't think so. I think we're really just at the start of the curve here, but some of the more direct AI plays, really lifting the US securities market. So maybe too late for the very, very smart money, but I think this kind of theme could still have many years to run.
So locally on Sens, we had results coming out of Zeda, and we do have a graph for the viewers to have a look at Zeda's, I suppose, call it share price movement. Listing at 18 Rand, it's currently trading at 9 Rand 77, was down 2.3% today. What did you make of Zeda's numbers?
So the numbers weren't terrible. I think Zeda is affected it's in a very difficult segment of the market. So remember, Zeta holds the brands like Avis and Budget in the car rental market, and that's very reliant on an economy that is functioning well, and it's reliant on tourism. Let's hope the weaker currency entices some foreigners to come to our shores and rent a few cars. But absolutely, it's a difficult segment. So while their profits did improve over the quarter, they made 376 million. They decided not to pay a dividend this time around because they are dealing with some legacy debt issues from the unbundling from Barlow World. Like I said, difficult segment for the company. The stock was priced fairly aggressively when it came to market, so it has come down, and hopefully the management team can turn things around. In the prospectus when it was coming to market, they were talking about really trying to broadcast to the public how renting is an alternative to buying. Now, I don't know if that is the real future of a car rental business, but certainly difficult market for it. I didn't think a bad set of results given the environment they're operating in.
As we begin to wrap up this conversation, where would you be allocating to sectors of the market that you believe show strength?
It depends local or offshore markets, but locally, I still think that our banking sector, is showing incredible value. We haven't seen, earnings multiples like this in a long time. Our banks are still very, very well capitalized, and I think, while the financial sector is down, you should buy when others are fearful. And on a longer term view, I think our banks, are going to, potentially do well for investors given current valuations. I still like a commodity theme in South Africa as well that offers a nice kind of rand hedge components for local investors. If we do see productivity and picking up, let's say based on AI, or the theme of China opening up and more trade flow internationally, that will be very good for commodity prices. So I think locally also commodity counters maybe an opportunity. They have come off their highs significantly, and then of course internationally, I mean, we really like the tech theme. With the higher interest rates, tech has really been hammered. And looks pretty cheap, all things considered. And if we do see the Fed starting to cut interest rates, into the end of this year and potentially at the beginning of next year, that should, send some excitement through the traditional growth stocks, and you might see a very rapid reversal in some of these tech companies.
Gary, let's leave it there. Thank you so much for your time. That is Gary Booysen, who's a portfolio manager at Randswiss.